Hello everybody, Joe Malone coming to you live. It's Tuesday, the day after Memorial Day. I hope everyone had a great weekend. I know I did. The market, interestingly enough, today has changed from a to a confirmed uptrend, which is really interesting. It's really interesting. And that's kind of what we want to take a look at first here on the show. So what I'm going to do here, pull up the screen and show you kind of what we're doing here. And for everybody on TikTok, hopefully I can get this right and move this over. Let's see if I can. Let's see if it's going to let me switch that. Let's see if I can do that. Okay, so we'll try it here. Hold on, come on. Trying to get it to show you the screen here. That seems to be the issue. It doesn't. Oh, there we go. Flip camera. There we go. So basically, kind of what we're looking at here, and hopefully you can see this on TikTok here, is that as you can see, we've pulled down, and then we're kind of coming to an inflection point here where we're below that 200-day line, and it's come down. And it has moved. It has moved up. It moved up 1, 2, 3, 4 days, and of course, that is the definition of a follow-through day. And now, what's a follow-through day? Well, a follow-through day is when it kind of moves into a position where you can possibly move back into the market long. Now, I've been kind of nibbling here, and I do have some short positions, but I did enter some positions today. I kind of wanted to show those to you, and those basically are this. I'm long CVX, which is Chevron. Let me kind of pull that. Let's pull that screen here, CVX, so we can get the live screen. Now, this was moving up earlier this morning, but it did take a dump, and it moved lower. So that might impede some people here, but I did add a position here today, CVX Chevron, and basically what happened is we came right through a buy point, and what happened there was that we came through this buy point. Let's see if I can show you that kind of on the screen here from my monitor. Here it has been moving up for the last 1, 2, 3, 4, 5 days. We're still in the buy zone here, and we came above the pivot being 174.54. So we're right above the pivot. It did pull back today. The question is, what's going to happen after hours? It's up a little bit. This is a relatively slow-moving stock, so it's going to be a situation where we might still have an opportunity here to get into that. Now, the only part of the market that really is doing well is the oil sector, and that's why I'm looking both at Chevron, and then I'm also looking at a covered call on Exxon. I haven't executed that one yet, but we're looking at it right now. The strength rating of the relative strength of Chevron right now is a 97. That's in the top 3% of the market, so that's very strong. We're relatively close to the 10-day line. That's not a bad place to buy it. We want to buy it within about 5% of that 10-day line. We're about 1.19% above it. So there's a pullback today. This may give us an opportunity to add to the position. I've been adding to the position currently. The checklist on Chevron is a 8 out of 9. If you're looking to get to kind of put a little bit of something in the market right now, Chevron might make sense, because this is one of the few areas of the market that is doing extremely well. Extremely well. So one of the things that you might want to look at potentially is Chevron with this, because it potentially can be, this is one of the areas of the market that is doing well, and does seem to be moving very nicely. Now, another thing I want to kind of put out here. Now, I haven't actually I haven't actually put this one into action today, but this is a covered call, which I'm going to do tomorrow on ExxonMobil. And the advantage of this one, this doesn't create a whole lot of income, but I think in this kind of market, it's a very safe play, and potentially you could pick up a few $100s if you do this. So the way this works is you basically buy 100 shares, and in this case it's ExxonMobil, and then you simultaneously sell a call. Now let me kind of see if I can show you this from TikTok. Let's see if we can move it over there. And there we go. I know this is a little hokey, but I do have multiple screens here that I'm kind of presenting on this one. So this is a look-see on this play that I'm looking at doing on ExxonMobil. Now Exxon, to do this play, this will generate in about a week. This has about a 69% chance of success, which is fairly high, and it will generate about $137 at the end of the week. Now, mind you, this one does require that you buy 100 shares of ExxonMobil, and then you simultaneously sell the call. So here's how it works. I buy 100 shares of ExxonMobil, which is, let's see what the price that it closed out at was, XOM, and that is currently trading at 96, so it's pretty simple. You then immediately, tomorrow, you buy at 96, you then sell the call, allowing them to buy it back from you at 96, and then if Exxon drops, you'll end up keeping that. You'll end up keeping the premium, which is $137 when I calculated it. And if it falls below $96, if it moves above that, then you will sell your shares at 96 and pocket the $137. Not pretty high potential trade here, pretty safe on a stock that is moving higher. That I think that might work out well. Then the week after that, if you don't sell it the first week, you just kind of rinse and repeat until you do sell it out. Now, of course, you're going to have to tie up about $9,600 on this, but the returns on this very good. You're going to get about you're going to end up getting about 130% on your money if you do this on a weekly basis. But this is an idea that I'm probably going to be pursuing next week, because right now, at least from where I'm sitting, the market is saying, the action is in the oil stocks, and that's really kind of, it's, even though we're on a follow through day, that's still kind of where the action is the best right now. So without further ado, let's get to some of the questions. I'm going to switch back to my ugly mug here. There we go. And we're going to switch the camera back. I'm just kind of learning how to sort of maneuver this. I still don't have a direct feed to TikTok, but hey, we're doing our best, and hopefully we'll have something going on here pretty quick. So let's take a question. First question is from Sam. Thank you very much. He's looking at LNG, XLE, please. And I hope you had a great week too. I thank you very much for that. Well, let's take a look first at LNG. LNG is a company called Cheniere, and it is doing quite well. It has been a kind of a favorite of everyone here. Let me see if let's pull it back for the audience on TikTok. Flip that screen and show to see if we can see the chart for Cheniere. Okay, there we go. So that kind of gives you a look-see at that chart. Currently, Cheniere is trading after hours at 137.75, and let's kind of take a look at it. This is in a consolidation. It's called a flat base. There is a pivot on this one at 150. Now, what does that mean? Well, the pivot, what that means is there is resistance here. So a stock will kind of move up in out of these bases, and then it will kind of, you know, come up to that, and then it will get resistance and then pull back. That's definitely what happened here basically in the third week of April. It came up here, it hit that resistance and then pulled back. Now it's going to make another try. It's come down and it's pulled back, and then it looks like it's going to make a move up. Now here's the thing I would say with Cheniere. It is still, unfortunately, sort of in this downward trend. Let me set this. You know, let me show you this. Let's see if I can reactivate that. Let's see if I can do that. All right, this is there we go. Reactivate. So what this is. So you reactivate that. There we go. Oh, it didn't quite work. But what this is, let's see if we can draw it, is this line represents, this line represents the, either it's in a downward motion or an upward motion. Now it's moved to an upward motion, but it's very weak. So right now, you know, you could buy it at this level. I would probably not do it. LNG, I just think it's a little bit weak. We've had a little bit of weakness in some of the shippers, some of the gas shippers. Now, look, Cheniere is not a shipper. What Cheniere is it's a company that liquefies the gas. They take it out of the pipelines, they liquefy it, and they put it on ships. So there is quite a good demand. The checklist on this one, 78. So I'm trying to see. Now, I currently hold another one. It's not Cheniere, it's FLNG, and this is a pure shipper. These people don't actually, FLNG does not actually liquefy it. They just have the ships that ship it. Same kind of pattern, this consolidation pattern. This is a little bit cheaper stock. We're seeing it, you know, hopefully we're going to get some support here. This one also might be an alternative. This one isn't quite as strong. So out of the two, you probably could add to Cheniere. The only thing about it is that I think that, you know, right now, unfortunately, and as strong as oil and gas has been, this is probably not the right area of oil and gas. Where I think you want to be is probably with your second choice there, Sam, and that is with the XLE. Now, what the XLE is that it's an ETF that basically tracks the energy sector, and this is the only sector really that's doing well. And you can see, but we're a little bit, unfortunately, we're a little bit extended. I wish we weren't extended here because this would be a good buy. But what you could do is you could either buy ExxonMobil or Chevron, because they tend to be the majority of this ETF. So let's take a look at Chevron CVX. This is the one this is my primary holding in the group. Now, the reason I like Chevron is over the XLE is because it's currently at a buy point. The buy point on this one, 174.54. Currently, after hours, it's 174.77. So it's in this what they call buy zone, which makes it relatively attractive. Also, another thing that you look at this chart is this black line here. This is the 200-day moving average, and let me see if I can show this to you on TikTok. The black line on Chevron basically is pointed up, and that's very, very important because that shows that there is capital flowing into this issue in the market. There's actually capital flowing into this market, flowing into this issue. A little bit of trouble with my stand here. There we go. See if I can get that to. No, I don't want that on performance. No, there we go. Hopefully this will work better here. Just trying to get it to, get it to play ball. See if I can use some tape. Make this work better. I have not figured out yet how to appropriately transmit to TikTok, and I've been doing this like a year. and it just unless it's either I'm a talking head or I'm making these these kind of silly things. I'm going to use some tape here to hopefully to get my stand working there. Okay, so maybe I could tape it. Oh, geez, I don't want real-time performance. There we go. Okay, so here's my here is the chart for Chevron. Here's the thing I think that you should take a look at with Chevron, and that is it is in this upward trend. It did pull back, but it's still right at the buy point. So out of XLE, the other one, and it also has a superior 8 out of 9 strength here in terms of the checklist. So this is definitely something that is actionable. Now, I wouldn't buy any more than one position on this one, but currently of the XLE is primarily made up of ExxonMobil and Chevron. Chevron is the stronger of the two. ExxonMobil, though, is not bad. And I'm going to bring up the chart here in just a second for ExxonMobil. You can see a nice ascending start. The only thing with the ExxonMobil chart is that it's a little bit extended. It's above that pivot, and it's a little bit extended there. So out of all of these, what I would recommend looking at possibly is I would recommend looking at the looking at Chevron as opposed to the XLE. And the reason I think you can do that is because Chevron is so large that I think that would work very, very well in the interim. So right now Chevron is actionable. I think that with XLE it's a little bit extended, and also LNG. So those are kind of extended. So that's kind of my take on it right now. But you're definitely looking in the right place, and that of course is in the the oil and gas. All right, let's look at FANG. Now, FANG is not FANG, it's FANG. What do I mean by that? Well, FANG, F-A-N-G, is Diamondback, and this is definitely a stock that you should definitely be looking at. I really appreciate you bringing this up, because FANG is Diamondback, and Diamondback is in the E&P area, and that area has been a very, very good area to look for potential potential stocks that can be bought. All right, so let's click on back on over, flip the screen, see if I can do this and show the chart for FANG. And this is the this is the chart for FANG currently. After hours, it's selling for 152.32, which is up a little bit. It is right in the buy zone. Okay, so that's something that you've got to take a look at. For this is potentially actionable. Diamondback Energy is right in the buy zone. The buy point on this one is basically 145.97, and it's at 152. So this is actionable here. It's got a relative strength of 97. You have an upward trending 200-day line. Everything is pretty well lined up for this one. It's got a 100% checklist, and I want to show you that because that is key. 100% checklist on this one is excellent. So I think that you're actionable. This stock is actionable, F-A-N-G, and it's not FANG, it's FANG, which is Diamondback Energy. So this one is actionable. Now, for everybody on TikTok, we've primarily been covering oil and gas stocks, and you say, well, what's going on with with all the other stocks? What's going on with what's going on with Google? What's on? Well, all of those stocks, believe it or not, are in a downward trend. So basically the situation that we have here is that we have a bifurcated market, and what that means, of course, is that the oil and gas are an upward trending market. That actual market is looking good overall. Now the rest of the market, unfortunately, is trending lower, so you don't really want to be investing very much in any, or if anything, in any of the tech stocks. They are moving lower, but the oil stocks, because of inflation and other reasons, that tends to be moving higher. So that is an area that you can invest in. All right, somebody's asking about BABA. Now, this is a stock, of course, that's been beaten down, and I don't think this is a good buy. Why? Because BABA is in a downward trend. Unlike the oil companies, as you can see, now let's change the view on this, and I'll show you this. When you're looking at a stock to buy, the first thing that you need to do is you need to look at the overall direction of a stock. Now let's look at BABA. BABA, as you can see, is moving downward. See that? See how that's moving downward? See how that black line is facing down? It's moving down. You do not want to buy this stock, and the reason that you don't want to buy this stock, by the way, if you're down more than 7% on BABA, please sell it, because unfortunately, according to the chart here, this one is going lower. So this is not a good stock to be buying right now. BABA is on a downward trend. I don't think you want to buy it. Now, a lot of people are going to tell you, oh, you should buy on the dip and all that stuff, but I don't think that's a very good plan. Right now, BABA is in a downward trend, so I would say with BABA on this one, I would pass, and I would say no. I'm not gonna be buying BABA at this price. Why? Because it doesn't make any sense, because it is moving lower. Now, this is the first thing that you always need to look at. You always need to look at when you're evaluating a stock to buy is, how does the chart look? Is it moving up or is it moving down? I know that sounds very rudimentary, but that's the first thing I look at. Is it trending up? Is it trending down? Unfortunately, BABA is trending down, and that's definitely the case here. So you don't really want to be in BABA. It's just not something that is, I think, worth your time doing that. So I don't think that you really want to be in BABA if you could avoid it. All right, BNB after that after Ethereum. Okay, well, I definitely think you can do stuff with crypto, but what I'm doing personally is I'm waiting for crypto to crash to 8,000, which I think is the support level for Bitcoin, and then possibly start looking at some other options there. But right now, I'm not in crypto. All right, good to see you. Oh, thank you. Hey, Dave, thank you so very much. I hope everything is going well with you too. All right, Mr. G wants to take a look at BORR. Let's look at that one to see if we have anything there. BORR, and okay, this is bore drilling, and this is definitely an area that you should be looking at. Why? Because it's in the oil and gas area. Remember, right now, we really don't have too many options in terms of where to look for stocks that are winners. Right now, the most winning area of the market is in the oil and gas area. So thank you very much, Jeet, for bringing this up. I really appreciate it, because let's see, to take a look. Now, this has a fairly good checklist, 6 out of 9. That's my minimum, but it's pretty good. But what really sets this one out, BORR, of course, this is an oil and gas services drilling company, and this area is this relative strength line. It's a 99. You can't get any better than that. This is in the top 1% of the stocks. Now, would I buy it at this level? Well, I probably wouldn't, because it is a little bit, and I know I'm getting super picky on this one, but I think it's a little too far extended above the 10-day line. Let's take a look. Yes, it is. Unfortunately it's 9.41% above that 10-day line. Here's how I would buy this one. I would wait for a pullback to within 5% of that 10-day line, and that's going to give us another opportunity. That's not that much considering the price of the stock. I mean, this was up 100% today. There's a lot of buying of this. So, you could buy it here, but if you do, you've got to be willing for a pullback. Now, if you did buy it at this level, and again, this is an under $10 stock, so typically I'm not buying these stocks primarily because it's considered a penny stock, but in this case, it's in the right area. So I agree with you. I think this is very, very interesting. The thing is, if it pulls back to the 10-day line, that would make it more interesting for me. You could buy it here, but if you did buy it at this level, I would set a hard stop level, a hard stop loss at about $4.80. Why? Because that is where the 21-day line is. And if you'll notice, this is trading above that 21-day line. We're in a confirmed uptrend. We are in a rally on this stock, but we don't want to let it drop below that 21-day exponential line. And the reason that we don't is because that will signal that it is going to move lower probably. So you could buy it here. You got to understand that it's extended. This is a relatively cheap stock. So, you know, I mean, if you went out with 100 shares, I don't think that would be too bad a thing. But I would, if this is your only holding, I wouldn't recommend going huge in this one, just because it is extended. You don't want to buy those stocks extended if you can avoid it. All right. Hey, what's up? All right, Wayne. Hey, thank you. Hopefully, nice Arch like this for earnings. Okay, cool. Now, for everyone out there, Arch is a coal company, and Arch has been very strong for quite a while. It's really interesting. This whole group, this coal group, has been like the #1 area. So let's see when earnings are coming up on this one. Just want to take a look, and looks as if, wow, look at that. Okay, I think did we just come through earnings? Okay, it's 99 relative strength, a little bit of weakness there. We went right down. Yeah, interestingly enough. Now, this is why I'm so keyed in on this 21-day line, because as you can see, today it came right back smack dab down to that 21-day line. That's why you want to put your stop loss right below that. But this is not looking bad. I mean, this stock is not looking bad, and I think this would be definitely a pullback to the 21-day line is a very good place to buy this. So this, if you wanted to get into this one, I definitely think you could here. It's not the exact pattern that I would like, but the checklist is strong. We're in one of the only really strong areas in the market. It's #1. This is the strongest sector. This is the coal sector. So I see that as being very, very positive on that. So I definitely think you could nibble on here. I really wouldn't go in very big on it, but I definitely think you could nibble on it. Let's see if we have a question from TikTok. Thank you. Thoughts on Google? Let's see if I can, let's jump on over to Google and take a look at that. GOOGL is the symbol, of course, and of course it's Alphabet, even though the symbol is GOOGL. Yeah, GOOGL. It's kind of like Broadcom that has a symbol that's kind of unusual as well. Now, here's the thing about Alphabet. You're probably going to think I'm very strange here, but I think that potentially, and this is sort of what I'm looking to do. I haven't done this. I'm looking at potentially a short on Google. Now, I haven't done this. The thing about the short on Google is why would I ever consider a short on Google? Well, one of the reasons I might consider a short on Google here is because it has moved up to that 21-day line, and if you'll notice, it closed right at that 21-day line. So I believe very strongly that there is resistance at the 21-day line. Now, the question is, where is that 21-day line in terms of the in terms of things? So let's look at that. The 21-day line currently, and it's right on it right now, is at 2273. So 2273 is sort of where I think you're going to see resistance. I think tomorrow you're going to see this thing move south on this one. Why? Because the overall trend, as you can see, for Google is downward. Okay, the overall trend is downward. We have had several tests. Now, it is true, it didn't quite hit the 21-day line, but there was a test there, there was a test there, there was a test there, and we had a fourth test. So my guess is we're going to see this thing continue on its trend, which is downward, and this is for Google. I think we're going to see a reversal here, possibly going lower. Now, currently the relative strength on this is 38. This is not really very good, because because according to this, 62% of all the stocks are stronger than Google. Can you believe that? 62%. So I would not consider this for a buy point, but I would consider possibly doing a short here. It would be a bear put spread, but I would consider doing a bear put spread here. I don't have that currently, but I would consider shorting this. Why? Because it's showing weakness, and it's rallied up into that 21-day line. Looks like it's getting rejected, probably moving lower, and we shall see. Now let's take a look at the 15-minute chart. This might give us a little bit of an idea. Yeah, it came down, gapped, and then moved right up, and then it got right to that level, right to the basically right to the 21-day line, and then boom, it went down. So the 21-day line is at, let's get the exact number here. Oops, come on. Hopefully no, it doesn't allow me to see it. Okay, so the 21-day line, come on. Well, it did let me see it for about 5 seconds. Okay, the 21-day line, 2273. Let's go to the 15-minute chart. Take a look. 2273 is right here. That's the 21-day line. As you can see, it went right up to that 21-day line, a little bit over, not too much, about 20 over. Got some resistance, then boom, it's coming down. So my guess is, in the next few days, we're likely to see Google move down. I do believe this is potentially a place where you could short here. So that's kind of my take on Google. I'm not short Google, but you definitely could take a look at it. Sam wants to take a look at the QQQ and the SPY. These are the two major indexes where we look at these primarily to see if what the market is doing. Now, currently the market is in an upward trend, and this is based on a fall-through day on the Nasdaq. Now, the QQQ is the ETF that covers the Nasdaq 100, the 100 largest stocks in the Nasdaq. So let's see if we can click on over so you can see this on TikTok. See what I'm talking about here. What's happened is that we've had these last 1, 2, 3, 4 days up. Last week was a strong week. We had a nice reversal last week on the Qs, and of course this represents the top part of the Nasdaq 100. So we're up. This is why we had a fall through day today, and right after hours it just pulled off just slightly. We're right above. Interestingly enough, we're right above that 21-day line. Now, the question is, what's going to happen tomorrow? Obviously, can it hold the 21-day line? Can it hold above it? I'm not so sure. I think that it's likely. I think we're likely to see a retreat tomorrow. That's what I'm looking at on this. Based on this chart, I think we're going to probably see a failed breakout tomorrow. But you don't know, because this is it's a very, very volatile market, so it's not easy to indicate that. But I do think we're going to see that tomorrow. We got one red bar at the end of the day, and we got it right about at the 21-day line. That's telling me that there's resistance, and we might get a further pullback on that. Let's look at the spider SPY. That's the ETF that covers the S&P 500. This is the other major index that we use to check the direction of the market, to see if there's been a fall through day or not. And the spider is not the same. It also is similar to the Nasdaq, but it pulled back today too. And it's very interesting because you'll notice the pullback was right after it breached the 21-day line. This 21-day line is extremely important if you're looking for direction in the market, because it tends to be sort of the line in the sand. It tends to be where it tends to be where the algos will start coming in. That's the reason why these lines are important, is because the algos and about 80% of the market is traded with algos in the funds. will be keying off these lines. So we breached that, so it's going to be a pullback. So I do kind of expect, even though we had a fall through day today, I do expect it's a very, very weak fall through day. I wouldn't really be out there buying hand over fist, but we're gonna probably see a little bit of a pullback tomorrow. We're going to see a little bit of a pullback tomorrow. The one thing that is kind of heartening here is that after hours, it's up. So it's been a very volatile, hard to trade market. You know, and that's just kind of been the long and the short of it. Let's take a look at Roger. What happened with SD? Oh boy, I know it's tough to, you know, you get into something and then wham, you get whacked. Yes, Sandbridge Energy. Okay, this is in an area that, well, you know, this is an oil and gas, so this, you know, you would think, well, the oil and gas is a great place to be, and I agree with you. I think it is a good place to be, but you know, it got too far above that 21-day line. Really, what you're looking to do is that a stock will move along this 21-day line, and even when it's in an uptrend like this, if it gets too far away, it will pull back. Now, you'll notice here with this little Easter egg, this was the highest volume since the last pivot, which is here at 14.99. So something's going on. Somebody's selling something. It's still got a 99 relative strength, but what I think really just happened here is people took profits, and that's going to be an interesting. So if you're not out of this one, if you're not down more than 7%, I would consider holding this. You know, I would consider holding this one. Now, I wouldn't buy it here, but I would consider holding it. This is the danger, unfortunately, of buying too far above. And let me show you this. This is going to come up here. Of buying extended, and that's kind of what's happened here. The correct place to have bought this, and of course, you know, hindsight's 20/20, would have been at $14.99 or $15. Unfortunately, it's moved up since then. So really, this really only gave you one really legitimate place to buy it, and you know, and that was back here in you know, this pretty much the second week of March. That was when you should come into it. That's why I keep talking about these pivots so much. That's why they're so critical. Let's take a look at Chevron to show you what I'm talking about here and kind of compare these. Now, Chevron, of course, is a much bigger company. CVX, if we look at it, is right at the pivot. Okay, this is on the weekly chart that we're looking. This is the pivot for this. It's on a flat base. The pivot is at 174.76. Currently we're 174.80, so we're right at the pivot. So this is a proper place to buy. Now, if we go back to SD, let's go back to SD here. You'll notice that we had really only one chance to buy SD. That was here at 14.99. So we have not been able to buy it since. I mean, it's been extended. Anytime you get more than 5% above the pivot, it is considered extended. So, and that's not a good place to buy the stock on that. So, you know, again, this is a tough market to trade. I'm not saying that, you know, I'm giving you all this technical information, but that's kind of the long and short of it. You got to be very you got to be very careful and buy at the right pivots. All right, MRO, and this is Marathon, I believe. MRO, another good oil company, and there is a lot to buy in the oil patch. It's one of the few, and this is also unfortunately extended. This is a good company too. God, it's tough to buy. It's just so hard to buy these. This is looking fairly good. It hasn't pulled back too much. It's moving right at the let's go see how it's doing on the 21-day line. This is actually one of my favorite stocks. Okay, it's a little bit extended. Okay, here's the thing. Here's what you have to look at. This green line, you want it to be above this green line, but not too far from this green line. Boy, I tell you, it's not easy. So that's kind of where we want it to be. We want to be kind of in this range. So very likely this thing is going to fall a little bit, but it's still an upward trend, as you can see. This is an upward trend here. What's going to happen is it's going to pull closer to that 21-day line. As you can see, it did right at the close, but it's up. So this is a strong stock. This is a very strong stock. It's just not a great place to buy it. Now, when I was talking about those pivots, that's a primary buy point. A secondary buy point is a pullback to the 21-day line. Currently, it's 12.87% above the 21-day line. This very, very likely is going to pull down a little bit closer to this. So don't expect this one to trade up tomorrow. I suspect this will trade down to the 21-day line. So that's not really a great, but that's sort of where it's headed. Okay, let's take a look at snow. Snow, of course, is snowflake, and that is unfortunately not in the oil and gas area. The oil and gas area is really where the action is. This one is, and I want to show you the chart on this one for everyone on TikTok. So this is the first thing you do when you look at a chart. You look at the general trend, and as you'll notice, it was doing great. It was moving up, and then the trend is not your friend. It basically has been moving down. So the problem that we have with, as you can see, look at that, it's moving down. So obviously, if you do the first smell test on snow, you're going to look at it and you're going to say, wow, that's a downward trend. So you don't want to buy this. You know, this is just one of those things. Also, another thing that I want to point out here is that the 40-day line, this is on the daily chart here, the 40-day line is moving below that 200-day line. That's called the death cross, all right? And what that means is, that means that there's money coming out of this issue. Also, if you'll notice, and this is kind of a little bit more subtle, is that black line, which is the 200-day line, is pointing downward. So basically, from March on, you would not have want to own the stock. Why? Because it dropped below the 200-day line, and the 40-day line crossed below it. That's the death cross. I think this is going lower, actually. A lot of big funds are going to have to get out of it. That means that you know, it's probably going to be shorted. Now, if it's going to be shorted, you're going to see a lot of these blow off tops. So you can see these things come up with as they have to cover. Here's the thing: if you want to short this, look at this carefully and watch to see how close you get to that 21-day line. Okay. Now, currently, we're not close enough to the 21-day line to short, but this thing will rally up to the 21-day line. It's a 13.2927% below that 21-day line. If we want to short this, we want to wait for it to rally up to that 21-day line, and that would be a good place to short it. I think that if you're down, by the way, if you're down more than 7% on this one is absolutely sell it and run away, because this isn't going to get better anytime soon, because this is in a downward trend and we're below that 21-day line. So not a good look on snowflake. So I would not be buying this. If people are telling you to buy on the dips and all this, I would avoid it. Just don't buy it. I don't think this one really you know, really is going to work. Is going to work at low. All right, let's go to Lisa. Thank you, Lisa. Can we short ASQQQ again? Well, here's the thing about shorting in a confirmed uptrend. I would not be shorting in a confirmed uptrend because because I would wait until we changed to a marketing correction. Here's what I would look to do possibly instead if you wanted to get exposure to the downside. This is tricky. Instead of shorting the QQQ directly, I would kind of wait for a bounce on the SQQQ. But right now, I probably would not be shorting. I would not be shorting the at this time. I mean, shorting is tough. I mean, I'll be honest with you. But so I would say don't short the QQQ right now. I just don't think it's a good place. I just don't think it's a good place to do it. Just because we have a confirmed uptrend. It's very weak, but we have a confirmed uptrend. So this is not a good time to be shorting the the QQQ. All right, we're almost out of time here. Let's take a look at let's see if we can get the last comments in there. I guess got bombed by the by the sexy site, whatever. Please, one last question. Oh, let's look at Oxy. This is a Warren Buffett favorite, by the way. This has been doing really good. OXY. It's a good stock. And unlike the Snowflake, this one is actually going in the right direction. So let's get this chart up here. Come on, chart. There we go. Notice again, this is what you always want to look for. You know, and I know I'm sounding like a broken record. Jim's, broken record here. But this is what you want to look for. You want to look for that trend. And the trend, as they say, is your friend. And the trend on Oxy is up. So that's very, very good. It's pulled back. It's close to the 21-day line. Could you buy it here? Well, actually, the proper buy point, and this is very obscure, is about 37.75. Currently, we're at 69, so we're pretty extended here. So I would not be a buyer here because it has not gone through what they call a basing period. So if you own the stock, congratulations, but I would not be adding to the position here, and I would not be buying it at this level. So that's kind of the long and the short of it. Well, thank you, everybody. And by the way, thank you, Wayne, for indicating about talking about the like button. It helps me a lot. So thank you very much. Please smash the like button. It really helps. So smash that like button, and I'm going to be back tomorrow, basically at 5 o'clock. And hopefully we can have some more things. I'm going to try to see if I can do this covered call on ExxonMobil, see how that, see if that'll work. And I'll have some more information for you on that, of course. Also, if you aren't already a member of the Action Trailer, it's super easy. This is free, by the way. Just go to www.Dallas Trading Floor. So please like us and go to www.Dallas Trading Floor. Thanks a lot, everybody. I hope you had a great Memorial Day, and I'll be back tomorrow at 5. Thanks for watching. Tell your friends, and happy trading.